I'm Anthony Hilton. I'm your moderator for the day. On my far side, there is William Hobbs, who is the CIO of Barclays Investment Solutions. Then, in the middle, Mohammed Shakir, who is the CIO of Kleinwort Hambros, and Michael Hewson, who is the Senior Markets Analyst of CMC Markets. Just to start off with, I say we're worrying about China and the US. I think if each of you could give an idea of where you think the market is going in the next 6 to 12 months for both of them, and then we'll follow that up with trade and all the other things. But just basically, starting with you, Michael. Well, yeah, why not start with you? Yeah, start with you, Michael, and we'll work through and see how it goes.
Well, I suppose it really depends on whether or not you're looking at the bond market or whether you're looking at the stock market, because at the moment the bond market is telling me one thing and the stock market is telling me something completely different. Now, the bond markets are telling me that the US Federal Reserve is likely to cut rates twice by the end of this year, which suggests that bond markets are predicting some form of recession in the US. Now, we've already seen the data coming out of China, we've seen it coming out of Europe. PMIs on the manufacturing sector suggest the manufacturing sector is in a recession and has been for the last 6 months. Yet stock markets are still pretty much close to their all-time highs, particularly in the US. And the recent sell-off that we've seen in the past week or so suggests to me that at the moment investors are still quite happy to buy the dip. We've seen a fairly decent rally today. There is tail risk. I think we all know what that tail risk is. He's currently sitting in the White House.
He's not actually.
Well, okay.
Well, not today.
He's not far from where we are.
Metaphorically speaking, he's sitting in the White House and likely to be doing so for the next year or so. So it really depends on whether or not you think that the US economy is in the cusp of a recession. The data doesn't really support that. Chinese manufacturing sector is in difficulty, but its services sector is still doing fairly okay. And the same, I think, can be said for the European services sector. If you look at Germany PMIs, they're still in fairly decent expansion territory. So I think as far as stock market's concerned, I wouldn't be overly concerned about further declines unless we take out the December lows that we saw at the end of last year. So either stock markets are right or bond markets are right. I think the bond market rally is slightly overdone, and I think we could see a rebound, yields edge higher, and as such, I think we're probably going to stay within the range that we've been in over the course of the last 6 months. And if that sounds like a safe answer, it is, because I don't really want to predict anything more than what we're in at the moment.
Mm-hmm. Mo, what's your view on it?
Yeah, it's quite an open question, I guess, is where is the market going to be in the next 6 to 12 months. So I'll start, and I'm sure my panelists will agree with this, predicting where the markets will be in 6 to 12 months is not only hard, it's actually impossible, right? We know that. Yeah. I mean, and that's just to start that with a caveat. So you can just stop listening to everything I say from here on, because it's not going to be helpful. But on a sort of just taking that question and splitting it up into different parts, in terms of the economy, and I'm just going to take a wider time horizon than 6 to 12 months to think about what is happening in the global economy. Over the last 100 years, the global economy has grown on average by about 3% in real terms. That 3% is defined by two major regimes, pre-1950 and post-1950. Pre-1950, the economy was growing at around 2%. Post-1950 at around 4%. I'm simplifying the numbers here to say actually what we've experienced in the last 50 years or so has been an above average experience than the one that was experienced pre-1950s. And so the world that we live in today is going to look more like the pre-1950s world than the post-1950s world. There's a number of factors that are driving this. Global demographics is clearly one aspect. And I'm looking at it at a global level. Clearly, there will be differentiation within countries. Some will be growing at a higher pace than others. But what we know today is that the softening in growth in the US and China, because that's specifically the area we're looking at, is not abnormal for economies of their size and their maturity. So we need to just accept that that's the world we live in, and not expect a world where growth is going to be more than that. It's going to be, on average, global growth by the IMF is estimated to be around 3.6%. China's obviously still close to 6, the US close to around 2. So that's a little bit on the economy. In terms of the stock market, maybe we'll come back to that later in the question, but it really will depend on much more than the trade war. We'll come back to the trade war discussion. I know you're quite keen to cover that. But the trade war is actually not going to be the main driver of the stock market performance. There will be other factors, and we'll cover that later, perhaps.
Excellent.
I'll
Well,
keep it nice and brief. EM major stocks up, developed stocks flat, bond yields up. No recession just yet. I think that's probably just about it. The guys have covered most of it. I'd agree with Michael. I think the bond market is taking way too dystopian a view on the future. For us, the prospects, you are finding that recession indicators, we've got our own in-house proprietary one, it's ticked up a little bit. That's primarily because of the decline in the ISM and the decline in hours worked. Those are the things that are worrying it. But there is, if you look at, the most important final slice of global demand, that is the US consumer, the US private sector. That's where that sets the drumbeat for the rest of the world still. And the health of that US private sector at the moment, that is a significant impediment to an imminent recession. Now, that doesn't mean that one can't happen, but it just means the probabilities are being exaggerated a bit by people's indicators. So for us, although we can't get that excited about developed world equities, growth looks a bit meek, I think you can get a bit more excited about EM, particularly at the levels it's gone down in this this trade skirmish. And if you assume that there's a deal somewhere between Xi Jinping and President Trump, which we probably do, then there's probably some upside there.
and would you see the US getting ahead of China, or China falling and the US rising, or
In terms of the trade deal?
no, just generally.
So I mean, I do think, one of the things that's really interesting about this current the concerns about China is that we're all assuming that it's going to be China's century. And there's this what we're doing is extrapolating, the miraculous last 20 years into the next 50. Now, what we know from in economic development terms is that the next stage of China's development is the really impossible one. So look over the last century, the countries that have made it from middle income or lower income status into upper income status, which is what they're trying to do, there's about 3 of them that haven't either struck oil or are next to Europe. Now, it is unprecedented for an economy of China's size and operating under the political regime and various constitutional regime that China operates under. It is unprecedented for them, for an economy of that like, to achieve what they're trying to achieve. And that goes to the very heart of this trade story, because what they're looking to do is they have, there's a Communist Party narrative which goes back all the way back to the first Industrial Revolution, which is we missed the Industrial Revolution. That led to the century of humiliation, I think,
And
rather.
humility.
Yeah, and humility and humiliation. And they see the two very directly linked. And so from Hu Jintao's regime onwards, they made a very distinct decision that they need to operate at the commanding heights of the fourth Industrial Revolution. And at that point, they became technology accumulators, aggregate, and they did so by fair and foul means. And that is really what the US is trying to say. They're saying, look, you're not operating on an even playing field. But in a sense, by treating China as this this much more present rival than they are necessarily in terms of US economic might, and talking about the Thucydides trap and all this other stuff, in a sense, they're making it more real because they're treating it more real, I think.
Well, we're on trade now, so what's your view on that?
Yeah, I think that the story is obviously unfolding week by week. And what's interesting is that the main discussions at the moment is around trade, but China has a couple of other cards that haven't been as discussed as widely, namely their reserves, which obviously they could bring into the negotiation and do something with. I'm not suggesting that's where it could go, but that's clearly a playing card that they have at their disposal. The other one, and we've seen some signs of this from the private sector in China, is that you've got about 400 billion of market cap in the US from Chinese companies. And there's already some movements, Alibaba is the most notable, where they're starting to think about listing back in Hong Kong or maybe even in China. And that is another card that could be played. Now, 400 billion for the US is nothing, right? I mean, it's not even half the size of Apple or Google and so on. It's a small amount. The bigger card they could play is the reserves card. They've got about 3.5 trillion, of which about 1.5 trillion is in US treasuries. So that could be something that could be played out. But I would agree with William on this. Ultimately, this trade, you called it a skirmish, I think. This trade skirmish is in some ways relevant at the global level, but actually China's concerned more about how to move from being a low-income, middle-income country to being a high-income one. And the only way it does that is by focusing on its consumer, not on being a global factory, right? I mean, the US and China are about 15% of global GDP each. So in that respect, they are equals, first and second, and China will be first in the next year or two. But on a GDP per capita, China doesn't even make the top 50. You know, countries like Romania and Lithuania have a much higher GDP per capita than China. So that's the perspective that's often lost when we talk about the economic might of the two countries.
Can I just say also, just to add to that, sorry, Michael, I'm sure you've got a much better point to make.
No,
in a second.
go on.
But just to Mohammed's point, I mean, also, in the West, we're getting obsessed with trying to recreate the past at the moment. Do you know what I mean? Trying to kick the shins of our competitors in order to recreate this halcyon era when we were amazing and we made stuff and, you know, our countries were defined much more along sort of ethnic and religious grounds, all this kind of stuff. In reality, we need to get busy and compete. You know, that's the whole thing with the US at the moment. You know, you need to recreate that story they had in the 1950s and 60s when, you know, the national labs, the universities, government funding, all working together to produce, you know, the innovations you see in your iPhones today. And that is, you know, in a way, we're getting way too focused in trying to kick the shins of the competition, when actually in the developed world, we need to work out how to compete and really start driving that kind of government funding, business, university kind of relationship that led to such a happy period. You know, well, for us
But you need to do that in a political environment that allows you to elect the politicians to enact those policies. And at the moment, from what we're seeing globally, it's not just a UK problem, it's not just a US problem. The politics is so polarized that you actually can't generate that business-friendly government, you know, sort of working in conjunction with each other, because so many people, governments, have neglected, say, for example, the poorer parts of their population, left them behind, which has allowed people to, you know, create a populist narrative.
Well, I mean, there's some who argue that you know that it's not. If you look at the sort of, you know, the explanatory power of, you know, income in explaining votes for Trump or Brexit, that doesn't really explain. Actually, the lowest income brackets came out for Hillary, and actually the best explanatory variables for Trump, populism in Europe, even Brexit, tend to be age, ethnicity, i.e. white, male, more rural, tendency to be more religious as well. So, I mean, it depends on your explanation for populism, I guess, whether you think it's a spasm that, you know, developed world constitutions have to digest in, you know, as an acceptable form as possible, or whether you think it's a much longer trend, which, you know, the fourth industrial revolution is going to make much, much more uncomfortable yet. So that can sort of, you know...
Mohammed, you made the point about raising GDP per capita in China, but how do you do that when you have a command economy? Because essentially China is shutting out inward investment.
Korea did it. I mean...
Well,
but
South Korea is a much more open economy.
Not then. So when South Korea made the transition in the 1970s, you know, they had a visionary leadership. They had, you know, a leadership who turned around and said, we are currently almost an agricultural commodity, but, you know, economy, but we're going to dominate these areas. And these are kind of the things that, you know, Mariana Mazzucato is talking about at the moment, is you need visionary leadership to pick out the areas where you think your economy, you know, where your comparative advantage in 10 years'
Actually,
time
and that's where maybe China is different to Korea, because it can compete in all sectors.
yeah, true.
You know, this is the thing. China 30 years ago was the factory of the world. Today, it is innovating in medicine. It's innovating in tech. It's innovating in space exploration. I mean, we don't hear about these things sitting where we do. But they're doing all of these things, and actually they're taking the industrialized world in all of their fields, because in some ways, again, the aspiration is to become self-sustainable, which is, again, how a country creates that global power and becomes a global leader in many respects. So that's where they have been leaders in many areas. Some of the innovation that you see, and I know we'll talk about that in the second panel, out of China, is much more advanced than what we see in the US, which is, you know, astonishing.
Which is one reason why Huawei is.
But I also
going
think
on.
it's easier
Well,
to do. in
Huawei's
China.
Huawei is a
yeah,
good.
it's fascinating.
That's why
Yeah.
there's some protectionism around that for that exact reason.
Isn't it the largest largest non-public or largest shareholder-owned company in the world?
And it's got 80,000 technologists.
That's amazing.
In a way.
Yeah.
Anyway, but enough of that.
Sorry, that's next panel.
So you're saying that you've either got China sweeping all before us and going and getting the growth it wants, or it's going to blow up because of its politics, basically.
It's very difficult. I just think my point is not, and I think Mohammed makes a good point, is that they are creating indigenous innovative capacity in China. So they're way beyond where some people think they are, definitely. However, the problem that they haven't quite yet solved is because, I mean, they've had such a phenomenal growth rate, and that has, the Communist Party legitimacy is very much vested in this continued growth rate, and I'm going to keep my jobs. And people, when we talk in the West about, Chinese people wanting democracy, it's just not true. It's not dinner table discussion in the way that it is over here. But what happens when the economy isn't growing? What happens when you get 5 years without growth in some period, which will happen? How does your Communist Party legitimacy hold up to that when, I haven't got my fair day in court? And part of the other point that, that these trade negotiations are getting to, which is really interesting, I think, is that if you want to create, widespread indigenous innovative capacity, what do you want? What do I want as an innovator? I want to be able to own the rights to my invention. So if I go along, I don't want some greedy monarch coming and nicking it. Now, so what I want is intellectual property framework evenly enforced, and that's what the Americans are asking for. So in a sense, some of these things that the Americans and the West are asking for may actually help China in their sort of bid to escape.
Maybe just to add to that, I think that the Chinese regime thrives on unity in its people. I mean, the population of 1 billion plus is clearly a huge population with diverging views, but nothing unites a nation more than a common enemy, right? And what Donald Trump has managed to do in these trade wars is he's given China a reason to unite its people. And actually, one of the things, I mean, this is anecdotal, but one of the things that has gone viral in the Chinese market are YouTube videos of songs about the trade war. Right? You should just Google some of these videos. Essentially, it's uniting the people, saying we're under attack, we're united, we're going to continue producing, we're going to get our people to work. This is not going to stop us, succeeding as a nation. I mean, I know it's an anecdotal point, but that's the patriotism that comes out of having a common enemy. And so what Donald Trump has managed to do for China is phenomenal in that respect. And the pain that he can inflict, I mean, there are estimates in saying if these trade wars and these tariffs are implemented, what is the likely impact on the global GDP? And estimates vary from 0.2% to 0.5%. I mean, maybe we've seen others, maybe we have different views. But that's the kind of impact we're talking about, which in the grand scheme of things is not a lot. And the reason for that is that people and companies in the US may not import from China, but they'll go and import from somewhere else. So there will be another beneficiary at the global level. And Vietnam is one of those biggest beneficiaries right now. You look at the trade arrangements between China and Vietnam, that's gone through the roof. It's skyrocketed because the producers are finding alternative means.
It's all being borne by the US consumer, basically, isn't it?
Yeah.
That's what comes
Well,
back
any
to,
consumer, I would suggest.
Yeah.
We're not seeing any evidence
Not
of
yet.
that in the inflation numbers.
No, but I mean, well, maybe there's no counterfactual. What would inflation be without it?
Happen because I mean, doesn't it lead to inflation when?
Well, it should do unless companies are absorbing them in their profit margins, in which case then they're not going to make anywhere near as much profit unless they pass them on to consumers.
Yeah,
so
which is inflation, or will
well,
come to inflation.
Yeah, if they choose to pass the costs on. But if they absorb it, it doesn't show up in the headline numbers. You're not seeing any inflation to speak of in the US. You're not seeing it in the UK. You're not seeing it in Germany. You're certainly not seeing it in Europe, where rates are minus 0.4%. And you're not really seeing it in China either.
But because you know what, the reason you're not seeing it is partly because of the reason I gave, is if you were importing your T-shirts from China, and now you've got 25% tariffs, you just go to Vietnam, and it's quite easy to change that supply chain in some areas, not in all areas. Change them, you still get them just as cheap, just as good, because these economies are desperate to compete against China. Actually, again, what Trump has done is managed to make them more competitive in that respect, but the Chinese consumers not necessarily, at least we haven't seen evidence of them bearing the brunt of this yet. Maybe that will come later. There'll be secondary
And the
effects.
latest batch is still at sea as well, isn't it? So you've still got, I think there's another couple of days until your shipments that left China on the last tariff day actually hit American land, and therefore it starts.
Yeah, they're going to hit America.
Physical
He's
effect.
not going to drop the tariffs, though, is he?
No. So it will hit, but it's really just a matter
And
of
he
kind
still
of,
has the option of doing the extra 325 billion.
yeah,
as
and I
well,
guess I mean
so-
that then depends on whether so that's your sort of trade chicken scenario. So when if you are, it's the madman theory, isn't it? If I'm playing chicken in another car driving towards me, what do? My dominant strategy is to throw the steering wheel out the window and look
You're
crazy.
talking mutually assured
that's-
destruction.
Yeah, and but that's the kind of
Yeah.
that's the theory that Trump is the art of the deal. Now whether you think it works or not, it's open to some debate. But
his own
I mean,
mind.
But
but
it
the
works,
interesting
or else he goes bust, of course. Which,
he could do. The interesting thing about it from academic perspective is, though, that when Trump prosecuted, and I'm not putting myself out there as a fan of his presidency, but when he started talking about trade, everyone was very much like, all the academics were talking about how unfair it was on China and so on and so on. But slowly but surely, you've seen academic opinion start to wake up to the idea that actually a lot of Chinese practices need to be moved on, that it's not just hauling up the ladder by which we ourselves ascended, that the developed world did protect their way to the top, but free trade is in the interest of everyone. But
I think he's
Yeah.
got a point on IP as well. Most
yeah,
definitely.
definitely.
Oh, for sure. Yeah,
Definitely.
I mean,
but is Trump actually wanting free trade, or is he actually trying to get at China and really make it
he's.
difficult?
But we can speculate about what Trump wants. Ultimately, what he's thinking about now is the next presidential campaign. And if you think about his campaign last time around, the flagship strategy that everybody will remember, or the initiative and policy that he put out, was the building of the wall and getting Mexico to pay for it. Right? And everybody thought, how's he going to build a wall? And then, how's he going to get Mexico to pay for it? Well, he's found a way. Now he's starting to impose tariffs on them. 5% and ratcheting up. And actually, he could, in a year's time, be able to go to his base and say, look, you thought this was impossible. I'm your guy. I can achieve the impossible. And everything else will be forgotten. What he's doing with China, what he's doing on the climate, what he's doing on domestic policy, because his base will say, look, he delivered the impossible. Now, I'm oversimplifying things, but a lot of voters vote based on emotion. We know that. That's in a lot of the elections that we've seen, especially in recent times, where there isn't necessarily a policy platform, but an emotion associated with the outcome. And that's what he's fighting for at the moment. That's his next big battle.
I still think that we're in danger of taking him. So what was that great comment from the Atlantic? It's his supporters take him seriously, but not literally, whereas we're taking him literally, but not seriously. And there's a bit of that, I think, with Trump. I'm not sure how. I have no idea whether he's protectionist or not. But I think what he does want definitely is election. But the point about the next election, if you look at the US system and the two-party system, as you know, most people have already made up their mind where they're going to vote. Now you get about a sliver of about 1.5% that tend to vote with the economy, swinging between the two sides. He's got to aim for that sliver. And do that, you've got to juice the economy somehow. So I mean, I do think that you need some form of trade deal, probably, but it's just getting it right. And what he needs is text, to the guy's points. He needs legal change. So he needs change in written law, Chinese written law. Now the rumors was that Li Yuhe, the chief negotiator, had actually granted that to the negotiating team. But apparently, when on the Chinese side, when they heard Trump calling for 100 basis points of rate cuts and more QE, they were thinking, I mean, apparently the Chinese authorities behind closed doors were like, well, we lie about the economy the whole time. Maybe he's lying about the economy and it's much weaker than we think it is. Therefore, he's much more desperate for a deal than we think he is. And so at that point, they backed out of their previous commitment to change legal text, and so Trump escalates. Now, that sort of gets, the thorniest issues are always at the back end of negotiations. I would argue that you've still got a deal to be found there, but you have to find a way, to Mohammed's point, you've got to find a way for China not to look like they've been humiliated by a foreign power, so that means taking off all tariffs. And on the US side, you need changes in Chinese law. It's not totally insurmountable, it's in both sides' interests, and politically that, I think, will help him get elected for the next...
But I think he's made that much more difficult now, given his actions with Mexico, because they've just signed a deal, USMCA. He just, on the 20th of May, removed tariffs on Canadian and Mexican aluminium and steel. So everything looks hunky-dory. USMCA is supposed to go through Congress this autumn. And then he throws out, okay, Mexico, I'm going to put 5% tariffs on you starting June the 10th, because I'm not happy with your immigration policy. So the deal that Robert Lighthizer and Stephen Mnuchin have painstakingly drawn up with Canada and Mexico is suddenly out the window. And that makes him a completely unreliable interlocutor.
I maybe not, I maybe, yeah,
But some people are great president. So that's
But it doesn't help you if then in future negotiations
Yeah.
with other parties, they think,
it does
well,
help
actually,
China
can-
take you seriously, though. If China, and again, you get back to that thing. How do you win this war against China? How do you win the negotiating game?
yeah, but the trade negotiators say one
play out
thing,
the madman theory.
and then the president says, well, actually, I was about to swear there, put that to one side, I'm not interested. So how can anyone negotiate in good faith if a week later the president can just, in a random tweet, say, well, actually, I'm just going to implement 5% tariffs from June the 10th, ramping up to 25% by executive order, and the rest of you can all go hang.
Yeah, well, maybe. We'll see.
I wouldn't want to deal with him.
That's something
Anyone
different.
in this room?
What about Huawei and its blacklisting? Is that part of this, or is it?
It's interesting. It's a really, it's a fascinating thing. I mean, the depending on whether you think it's a security threat, seems to be what sort of political order you belong to. So there's the Five Eyes, isn't there, which is Australia,
Do you
UK,
think it's a
New
negotiating tactic on Trump's part?
Potentially.
Was
But
to
there
try
is
and-
certainly, so there was evidence in the UK, certainly British Telecom discovered a load of bugs in the Huawei software stack, didn't they? But in Germany...
Well, they found backdoors in, but there are legitimate backdoors and there are unofficial backdoors. All routers have a telnet backdoor in where you can do server maintenance and what have you. And that's quite legitimate.
The
because only
feeling was that these were a bit more sinister than that. But as I understand it, Germany has got comfortable because Huawei have given them control of the software stack, as I understand it. Not that I understand exactly what I'm saying with that.
well, it's the hardware.
Well, that's what they did.
But that's what they did.
It's, not
and
so
they
much,
feel
it's the
comfortable about
hardware
it,
stack you need to be worried about because it's a whole host of routers and what have you that are interlinked, and you need a backdoor in to construct maintenance. It basically means that you don't have to send an engineer in to reset a router.
Yeah, okay. So if
you can remote in, reset it, and make a program code change.
It's certainly a weird company, though. I mean, it's forced retirement at 45. Mr. Wren said it's the chief executive, isn't he? And the founder, and he turned around. His famous comment was, "The only thing I can promise our workers is hardship." Wow. Okay. Awesome.
I think Jack Ma said that as well, didn't he?
Yeah, I'm out. Yeah.
I think because it's not public, is it? I mean,
No, it's
but,
totally.
But the employees have basically got 50 or 60%, or perhaps more.
And so I mean, I think the forced retirement thing by 45 is you were either a multimillionaire by that stage or you failed, basically. So it's kind of.
I think maybe just to look at it slightly, well, not slightly differently, but just to think about the perspective here. I mean, so Trump is saying that the trade arrangements that we have with China are not a level playing field. He's saying that some companies are a threat to national security and so on. And these are capturing the headlines, and the global stage is thinking, wow, what is this guy doing? But actually, the Chinese do this week in, week out. They've banned several IT companies, the Googles in the 2000s. They're saying, actually, they're going to come in, they're going to run IT infrastructure that we can't see what is happening. That's a threat to our economy. That maybe causes the uprising that we are trying to avert. So that's just one example. There are several along the way. They are controlling their currency. They control trade flows in and out and the supply chains along the way. They do this much more than the US, like orders of magnitude that are in the tens of times versus what the US is doing. But clearly, because the US is thought of as a free market, open economy, democratic processes, etc., it's considered to be a bit more of a taboo to do that than in China, where it's more controlled, more closed, etc. So, in his defense, he is actually leveling the playing field a little bit with this other economy in China. So that's why there is some sympathy from some people saying, actually, it's good that you're taking them on because it creates more competitiveness for other countries as well.
And that's totally, so China has not lived up to its commitments that it made when it joined the World Trade Organization. But at that stage, there was a plan to converge with the market economy. Hu Jintao comes in 2006-7, someone will be able to correct me, and changes the direction, and they move back towards a state. And that's gone more and more. And Xi Jinping, the whole, made in China 2025, all of that kind of stuff, that's gone much more in that direction. And so, people have tried to do something about it before. Barack Obama, hauled Xi Jinping over to, that meeting, famous meeting, and he turned around and said, "You're nicking our IP, and Xi Jinping said, no, we're not. And he said, here's the evidence. He was like, all right then, you know.
But you see, if Donald Trump gets his deal and the Chinese say, okay, well, we'll stop on the IP, we'll stop stealing the IP. Do you actually think it'll happen? I mean, won't they just carry on as before?
Well, I think the question was, would there be a mechanism whereby you could adjudicate on the theft of IP? And I think that's where the talks fell down, because I don't think China was totally impressed with the neutrality of the process. Maybe that just gave them an excuse to pull out.
Yeah.
But I think it's how it's policed is going to be, I think, the key sticking point if they do finally get around the table. But I certainly think there's an element now that the Chinese are waiting Trump out, because over a year from now there'll be an election. And I think they're hoping that he won't get re-elected. But I think you have other ideas about that, don't you?
Wow, I mean, I wouldn't bet against it, would you?
Depends who the
incumbent
Democrats
president?
put up
Popularity's
against
gone
him.
up since the publication of the Mueller report. He's actually polling quite well, because that was the biggest cloud for him. That's been removed, and that was arguably the best part of his presidency so far for him, is he's removed this source of tension for him, and now everything else is standard presidential stuff. We did some things, we couldn't do others. Give us 4 more years and we'll implement sort of the agenda that we set out to do 4 years ago.
And there's no one in the challengers who sort of immediately stands up and says he would be immediately.
They need a smoking gun, and at the moment they don't have that against him.
Yeah, they normally have 2 terms, don't they? I mean, Carter didn't, and I think George Bush didn't. But all the others have been 2 terms.
Yeah, I mean, Obama, Clinton, Reagan.
Yeah.
Nixon.
Yeah, we know what happened to him, don't we?
Some of his second term.
But it was Bill Clinton who said it's the economy stupid. So I think if he can avoid a recession,
if you can avoid a recession and you can juice it up, and so I mean, he'll be trying to bully the Fed. He'll be signing deals, whatever he can do to keep it going.
So what about the hegemony? I can't even say it. The hegemony of America and China. That because you're saying that the Chinese won't be able to compete exactly on technology, but presumably, I mean, given they are or will be the biggest and substantially the biggest, and won't they basically be the world's dominating force? And
they're going to be very important. I mean, that's for sure. And I think Mohammed made the point well that they are already at the commanding heights in some of the technologies that are really going to be important in the next decade or so. That doesn't necessarily mean that they are going in for a period of global hegemony of the light that that the US has enjoyed. And this is personal opinion, but I think the US enjoys an advantage across a range of sectors that is not close to being equaled anywhere else in the world, I don't think.
I don't think it really matters that much, to be quite honest. I don't think it really matters that much in terms of the Chinese economy, because there are other economies out there that the US can sell into. India, for example.
That US can sell into, potentially.
Yeah.
I mean,
that's potentially even bigger than China.
China's still going to need to sell beyond its domestic marketplace. Do you know what I mean? They're still
so it needs to sort out a trade deal of some description.
And that was the interesting thing about Korea, in a sense, that what Korea did is they didn't just pick in a quite sort of state-led way the sort of industries they wanted to dominate. They exposed those industries to intense global competition. Now, in China, the main competition has been behind the sort of Great Firewall. And so they've created these amazing companies, Huawei being one example, there's others, that have got a huge domestic audience. But are they fit to compete in the global marketplace in the way that it's undecided, and in my opinion, and one of the things we've got in the UK, which is an understated advantage relative to previous eras, is we have, quite a competitive frontier in the corporate sector, because it's been forged in the white heat of competition, global competition.
Well, we've got good fintech, but it's tiny compared to the others.
The UK?
In the UK,
yeah. We've got a long way to go in some areas, obviously. But in a sense, just looking at a broad range of companies, in terms of on the frontier, you allow global competition to sort of, to harden these companies, to make them sort of resilient to to the global forces. And the question is still open as to whether Chinese companies can compete head to head, without any protection or anything, with some of the US companies. Now, some can and some will be able to. But across a range of disciplines and the way that the US has managed, I'm a bit more...
I think maybe what we started talking about, the per capita angle, where we talk about it in GDP terms, obviously it doesn't look good for China because of its large population. But you can actually use that, again, that per capita in different measures where it does actually look extremely well. Carbon emissions is a good example. So carbon emissions in China per capita are lower than where US was 50 years ago. So, and it's an industrialized or getting increasingly industrialized as an economy. So one of the areas where they could lead, this is an area, is in sustainable energy, and they could end up being an exporter, not of oil, not of gas, but actually of renewable energy. And they're investing quite aggressively on that front, and they're doing huge things, not just within their economy, but also thinking about how to export that.
Well, solar panels is a big growth.
Yeah,
in China.
yeah, and we know Trump is, supporting coal, for example. So he's slightly going the other way, but that's where China could potentially sort of break into new areas and new frontiers in the global economy.